Hi, I'm Phil from Let Property. If you're serious about investing in property this year, here's the good news. The UK rental market is still incredibly strong. In fact, rents are 21% higher than 3 years ago, while house prices have only risen about 4%. What that means is simple. If you focus on the right properties, the right locations, and the right numbers, you can build a portfolio that generates consistent income and long-term growth. Today, I'll share 6 tips to help you succeed as a property investor in 2025 with real examples and stats from across the UK. Tip 1. Stay on top of the market. The first rule of successful investing is staying informed. Right now, demand for rental homes massively outweighs supply. According to Zoopla, the supply of homes available to rent is still 20% below pre-pandemic levels, which is why rental prices have been surging. Yes, growth is slowing. Rents are forecasted to rise about 3 to 4% in 2025, down from 6% last year. But with so few homes available, quality properties are being snapped up in days. If you're keeping an eye on this data, you'll know which regions are moving and you'll spot opportunities before other investors do. Tip 2. Cash flow over capital growth. With interest rates where they are, your rental income is the most important part of your investment. The average gross rental yield across the UK is around 7%. But remember, once you include management, insurance and maintenance, that usually drops by 1.5% to 2%. So if you're bringing in £10,000 a year rent, your net income is closer to £8,000, which works out at a 6.6 net yield on a £120,000 property. It's tempting to chase capital growth, but in 2025, it's your rental income that keeps the mortgage paid and your portfolio secure. Tip 3. Choose the right locations. London might look shiny, but with an average yield of 3 to 4%, it just doesn't stack up for most investors. Compare that to other parts of the UK. In Manchester, student-heavy areas, yields are pushing 9 to 10%. In Birmingham suburbs, you can find 6 to 7% with strong tenant demand. And in parts of Glasgow, yields still sit around 10%. That's why many investors are heading to the Midlands and above. You're buying at a lower entry price, but the rent is often just as strong as in the south. Tip 4. Consider tenanted properties. Now, one of the smartest moves you can make is to buy with tenants already in place. Here's why. You start earning income from day one of ownership. If the rent is £800 a month, that's £800 in your pocket from completion. No void period, no advertising, no hassle. And usually the property is already fully compliant with things like gas safety and EPCs. It's essentially a ready-made investment. The key is due diligence. Check the tenancy agreement, payment history, and whether the rent is at or below the current market rate. But get it right, and you could skip straight to the best bit, consistent income. Tip 5. Manage your risks. Now, let's talk about risk management. This is where many landlords trip up. Buy-to-let mortgage rates are still sitting around 5 to 6%, so always stress test your deals. Ask yourself, if interest rates rise another 1%, will my rent still cover the mortgage? A good benchmark is to have rent that's at least 125 to 145% of your mortgage payments. That gives you a cushion. And don't forget to budget for voids. One empty month every 2 years is realistic. If your rent is £700, put £350 aside as a safety net. Planning ahead means you won't get caught out. Tip 6. Think long term. Finally, play the long game. Property investing is not a get-rich-quick scheme, but over 5 to 10 years, the combination of steady rental income and modest capital growth can be incredibly powerful. Remember, the private rented sector still makes up almost a quarter of UK housing. People will always need good homes to rent. So, if you look after your properties and your tenants, you'll keep that income flowing for years. Yes, regulations and taxes shift, but the investors who adapt, stay informed, and keep a long-term perspective are the ones who succeed. So, to recap, stay ahead of the market. Focus on your yields. Invest in the right regions. Consider buying tenanted properties. Manage your risks, and always think long-term. Follow these 6 tips, and you'll be far ahead of most investors in 2025. If you found this useful, don't forget to hit subscribe. We've got plenty more insights and strategies coming your way. I'm Phil from Let Property. Thanks for watching and happy investing.